So I'm going to be doing a quick chat with TK Kurien. TK needs not much of an introduction. He's been in the Bengaluru scene for a long time. He was held several positions at Wipro, became the CEO, ran that for 6 years as CEO, and then has moved over to Premji Invest, the other side of the house, and runs a lot of capital there. So TK, come on up. We'll have a great conversation on investing. So a lot of you who are startups, pay attention, because this man has done some amazing investments. So TK, before we get started, just talk us through Premji Invest. What is it? How much capital is there, and so on and so forth, and what kind of deals and investments you make in general.
So maybe I'll just kind of quickly introduce myself. I got into IT services by accident. I used to work for a firm called General Electric, and I was doing engineering for the X-ray business. That was my last role. And then for a short period, I was doing corporate restructuring, which basically meant firing people. So Premji once told me, hey, listen, why are you working on the dark side? Why don't you come to the bright side and do something on growth? So one of the biggest things, at least, that I learned at Wipro was that there are two kinds of people in the world. Younger companies by themselves and younger people generally tend to be aggressors. And over a period of time, what happens is that the company becomes older, the average age of the company goes up. What used to get done in seconds now slowly becomes hours. And then very soon what happens is entropy sets in on one end and rigor mortis on the other, which is the most dangerous combination to have. So that's what happens to most companies, that after some time, there is a sense of fiefdom, and there are many, many examples. If you look at all these companies which are kind of coming up, the real aggressive companies depend upon founders. When the founders lose their passion, everything else kind of slows down. That's one big learning. So when we moved into Premji Invest, and I'll just come to Premji Invest, from IT services into Premji Invest, I had no knowledge of investing. We started with a capital of about 1.9 billion. We put in another 600 million from the foundation. The capital in Premji Invest comes from the foundation, and the foundation is used to, basically what we do is we fund programs in education, we fund programs in healthcare, and then we have a third component which we call social impact, where we give away money to social causes. So Premji basically said, hey, listen, this pool of capital that I've given, I want to make sure it grows. And this was in 2016. I was moving out. I was going to do another CEO job in the US. And he said, why do you want to waste your time doing that? Why don't you sit here and do this? I had no idea what I was getting into. We grew the company from there, Premji Invest, with an AUM of about 1.9 billion. To last year, 31st December, we were roughly about 16 billion. Wow. With about incremental 600 million going in as capital. So that's been the growth. We were one of the early investment firms, at least in the US. And by the way, we have a team in the US. We had a team in Boston, and we have a team in Menlo Park, in Sandal Road, and another one here in Bangalore. We are a small bunch of people. It's a very small team. In the US, our team is all of 17 people. And fundamentally, what we did was, when we started, we said we'll invest in SaaS at one end, on the technology side, and we'll invest in healthcare. When you start healthcare investment, we had one person who came from the healthcare background, and he was an expert in that area. And we had two people on the tech side. That's how we started. Our first investment on the healthcare side was Moderna. And we invested really cheap, because this concept and the promise of mRNA was something that fascinated all of us. Needless to say that the first 3 targets that Moderna had told us that they would commercialize has still not seen the light of day. COVID came in and rescued us. And it was a bumper, because stock moved all the way from our investment value of $3 to about $350. So we were one of the few people who actually made money out of COVID. The next big investment that we did, the first one again that we did, was Anaplan. And that followed a whole bunch of investments that we made. When Anaplan went public, we were 17% of Anaplan's cap table. We sold it to Thoma Bravo for $10 billion, and we exited. And then there were a whole host of them. Robinhood was the other one. Then we had Zuora, Aptus, then Icertis, which is still around. And there were a whole bunch of them. About 4 years ago, when we saw OpenAI coming out there, and the first models kind of coming out, we decided to put a small team together to kind of look at this. And this, if you remember, was at the time when crypto was flying, a whole bunch of other things were flying. And we looked at this and said, look, this seems like an opportunity with which you could really kind of do something. Very fundamentally, we went after, again, we made one big mistake there. Some of the frontier models then were available to us at throwaway prices. Anthropic, we passed on the investment at $1 billion, at $5 billion, at $10 billion, at $17 billion, and we still don't have it. So this is a classic example of what you miss. So that's been, and then we now have today about 20 companies in the AI space, most all the way from semiconductors to frontier models, especially in maths, and we do a lot of work on the application side too. So that's broadly what we do. On the healthcare side, we've pivoted more into gene therapy. And what we've also done is that we've invested in healthcare systems. In fact, one of our investments, Devoted Health, is a classic example of how AI is used at scale. So it's a whole bunch of these companies that we've invested in. Portfolio is about 84 companies right now.
Awesome. Great lead-in. I have some specific questions. What percentage of the portfolio is U.S. versus India? Is it primarily U.S.?
Yeah, it's 33% US, 33% India, and 33% public markets. Public markets, when companies go public, we tend to hold the shares. We don't tend to divest in a hurry.
Got it. So let me get to the AI space. A lot of these guys are curious about AI. So questions on India itself. Does India risk becoming the inference back office for US AI? Are we just going to do some inference work and that's it? Or do you see a larger share for India?
So, there are two parts to it. Again, if you look at language models today, think about language models very simply as learning by rote. All the knowledge in the world is digitized and dumped into a system. As you use it, context comes in, a whole bunch of things comes in, and it looks intelligent. The reality is that when you look at yourself as an individual, language by itself is one representation. There are 5 different senses that you use. And ultimately, I think what will happen is that once you move from the current language models to world models, I think that's where the pivot would happen. Because today, if you look at introducing LLMs into the workforce, it's a great tool for productivity in some areas, like, for example, coding. But try doing that in complex tax matters, which requires significant inference time. Anything that's got long inference, today the current AI systems don't necessarily do well there. So the thing with India that we have, which I think is unique, is that to a large extent, India has really become the back office of the world. If you look at most people who actually do work in complex claims processing, for example, they have the level of knowledge that's required to really build something. But most of these guys are sitting inside back offices of US companies operating out of India, and their vision of figuring out the end-to-end chain on the value that it can deliver is something that I've not seen at scale. There are 1 or 2 people who actually break out and come with ideas, but on the average, there are very, very few people who do it. But this, I think, is a huge opportunity for us to kind of build products in specific areas. And we don't seem to be capitalizing on it.
Great. So the other issue is with AI itself, when you look at companies, what kind of moats are you looking at? Because it seems like everything moves at the speed of light. So are you looking at moats in your, is it data? Is it the vertical market? Is it distribution? How do you evaluate your deals?
So, it's extremely difficult to do at MR today. Because what happens is that it's like walking on quicksand. Before you know what's happened is you're swallowed inside. So ultimately, you have to really bet at the stage which we invest in on the founder. Because if you look at a founder, the founder's ability to fight for what he believes and to kind of take pivots quickly, to experiment, those are the kind of qualities that we look at from founders. And I think at the end of the day, if you look at it, founder quality matters. And if you really want a live example of this, I'll give you a very interesting example. One of our companies is a company called Devoted Health. Devoted Health is an as old-fashioned company as you can see. They run Medicare Advantage in the US. So until they started in 2016, we were early investors. We invested when the value was about 300 million. The company was doing something like 100 million in revenue then. Scaled up last year, that is 24, to 2.7 billion. And they had 2,500 people. 25, the revenue moved to 9.7 billion. Still 2,500 people. Next year, the number is going to be 16 billion. 26. Still 2,500 people. They truly believe that their next change is going to happen when they hit something like 30 billion. That's when they'll start needing people. The other one is a company of ours called Base 10. Last year, when we invested in them, the revenue was 30 million, and they had 20 people. This year, they're 230 million with 19 people.
Holy cow.
So the whole linearity that you expected with growth is getting cut away. But the ability to go out there and look for, so moats itself, what's a moat today may not be a moat tomorrow. I think that's the key.
Yeah, and the revenue per employee is going to be the big metric now, as opposed to the old days where you wanted thousands of people in the company, right? So the previous session, people talked about the IT services industry. So if you were starting a new IT services company today, how would you play it?
Well, the easy answer is I probably wouldn't, but anyway, but just kidding there. But I think what happens is that, if you look at services by itself, and I'll break it up from a customer perspective and the internal organization perspective. If you look at a customer, there are three kinds of CIOs, the way at least I look at it. There's a very smart, tech-forward CIO. The tech-forward CIO will experiment with whatever he can. That the Indian IT services firms that exist today, there may be some of them which are different, but at the margin, but mostly all of them, their ability to actually react quickly to situations presented by that kind of a CIO is limited. Because take forward deployed engineering, working with business, understanding technology, putting it together, quick turnarounds, not something that we've been used to, because typically the Indian model has been a T&M model. And moving out of a T&M model into outcomes is mentally a big shift in the minds of people. Then there's the second bunch of CIOs, which I would think would be, and by the way, the first bunch would probably be about 20% of the people. The second bunch would be about 60%. And that is diminishing now, but it's still there. These are people who want to show the world that, look, they are AI-centric. So they might buy new AI tools, deploy some of them. Pace of change is going to be slow. That's where the IT services people come in. The Indian IT services people come in, because they understand the environment, or they should understand the environment in which they're working in. So that's an opportunity. The last piece is people who don't change. That'll be about 20%, and they will continue to be there. They'll never go away. Services business never die. They just wither away. And I think we're going to see that happening soon.
So, turn the question the other way. If you were starting an AI software company, how would you look at the market today? There are hundreds of entrepreneurs here, and many of them are struggling to find the right market, the right domain, the right application set. What would be a tool that the investment community like you uses that they can use to kind of figure out what they should do?
So again, Amar, difficult question. I must admit that I quietly dug the first question that you'd asked me. If I'd started something new, what would I do? Yeah. But anyway, let me come to this one. But so I think, the biggest piece of advice I would give you is look for difficult problems. Don't look for simple problems to solve. The best example was that recently we were looking at a company that was looking at oil well data across the world. And they had digitized this data. And a lot of the oil well logs are all digitized. So these guys went back to see, based upon the current geology that people understand, are there wells that they can go out there and figure out that the current large exploration companies were not focused on? And I was fascinated to see the results they were getting. Because if you went and dug a well in the 1960s and you thought it was too difficult to explore, and the digital data that you had, if you managed to kind of, in a way, digitize it, and using AI, we're able to figure out that this particular rock strata might actually have oil trapped in it, that's hugely valuable. So, again, this company's whole perspective was, let me go out there, look at these oil wells that I've discovered, and do revenue shares. It's a completely different model. If you're looking at something where, on a traditional basis, if you went into a seed-based model, that's a wrong place to be in. And I know the previous session talked about it, and I'll just give you a very simple example. Till Azure became important for Microsoft, there was a period of about 20 years, 22 years to be precise, where Microsoft valuations always remained between 10 and 14 times PE, price earning. After Azure came in, that number has moved to 26. So seed-based pricing and the feeling of entitlement, which a lot of software companies have had in the past, that's not a model to follow.
In your investment portfolio in AI, what percentage of those companies are India-based versus the US or other markets?
I would say, I wish I could say 0. That's the right answer. But are there Indian founders who have gone and raised money in the US? A significant portion of them. And funnily enough, what we're finding is that there are lots of Indian founders going and, who have really got great ideas, who are going and raising money in the Valley. And some of them are really deep. We've seen at least 2 companies working with physics models and 2 companies working with pure maths models. So these are absolutely at the cutting edge. And the company started from India, Indian founders, went to Indian schools, raised money there, and now have kind of re-domiciled there. We see quite a few of that.
Interesting, because even Perplexity and all these companies have gone to the US. So what do you say to the founders here? Go pitch to investors in the US and do that? Or, because we had 100 startup list that we put up this morning, TK, and those companies had gotten about $3 billion in investments from India. These are all India-based companies.
So I would say 2 things. I think the Indian ecosystem also is changing. Don't run all the time to the US. I think as far as India is concerned, there are plenty of people willing to listen to ideas here in India. The Indian VC community hasn't really kind of stepped up at the level. By the way, it includes us also. We're not kind of shying away from this. Hasn't really stepped up to this because the concept of risk capital is somewhere and doesn't come naturally to all of us. For us, for example, we are quite happy to lose money. Not that we lose money every time, but we really make money in some cases which are extraordinary. So we're quite happy to take that bet. So all I would say is that pitch in India, there are plenty of firms that will accept the pitch and fund you. Once you reach scale, go abroad, because that's where the big step up happens in terms of rounds. The value of debt that you have in the US of B rounds, you can avoid to some extent in India. And after that, C and above, you can always go abroad.
So big question. Will there be a $100 billion AI company that comes out of India? Any guesses? I mean, what's your take?
You know, there's one area where you can really build a $100 billion company. If you look at maximum friction that we have in the country, any guesses where it exists? Where do you get maximum friction? Not driving down to this place, that's separate, but besides that, in transactional friction, any? Healthcare, banking, more importantly, anything to do where the government has a compliance interface. The biggest area for opportunity in India is to see what you can go do in government interfaces. That's a massive frictional area. I mean, massive area of friction. So, which is not there in the West. Because what happens is that we have, in India, one of the biggest things we have done is that some bureaucrat, for good reasons, has put in a rule. And guess what? They've forgotten to remove it. Because the guy is probably retired and gone. So there are plenty of these rules which sit there, which are completely infructuous. Can you imagine what the pace of activity in the whole economy, how much it would change if you just take that one element and work on it? I think the impact is massive. It's a very difficult problem to solve. The second big area is defense. Defense, I think, is a huge area of opportunity. And like this, healthcare is again got to be delivered very differently in India than it's in the West. So every segment has got opportunities.
Awesome. Our time is up. TK, on a personal note, what mountain are you going to climb next?
Good question. You know, my wife has just banned me from climbing mountains. So I climbed Mount Cook many years ago and I broke a couple of ribs. So, and after that, I've been told no more mountains, back to the earth. You can go running in the morning, which that too I've managed to. I broke my jaw about 3 months ago, running. So I'm kind of accident prone, so mountain climbing is off.
Oh man. But you've done great with investments. So a round of applause for TK.
Thank you.
TK,
Thank you,
before you go, I have to ask you the question that a lot of us are worrying about jobs. Can you just talk a little bit about jobs and what can we do? How can we inspire? We have a lot of young people here today. You can talk about that.
I think what's going to happen, again, you know, this is a hot topic, and this is like COVID, where everybody's a vaccine expert, or everybody's a COVID expert. So I won't claim that I'm an expert on jobs. But I think what we are going to see right now is a cliff coming up, especially for people who have graduated out of college, who don't have the work experience where they're able to connect dots for them to actually be effective in a workplace. Our whole system of apprenticeship, which used to run in the way we started our careers, is completely changed. Because some part of it is going to be done by the machine. It's the handoff from the machine that's going to be important for you to understand, and what that means in terms of the next process you're going to spur on. So I think the only thing that I would kind of advise each one of you is get deep in whatever you do, understand the context in which something is operating and why it's operating. The thing is, our educational system doesn't prepare us for the why. It always prepares us for the what. And the why, I think, is the most critical thing that we have to worry about.
Thank you. So well put. Thank you so much.
Thank you, TK.
We have to do something with MR here. You know, whenever you're with MR, you're surrounded by Tambrams. Today, there are 2 Malayalis. We're outnumbering you, so we're going to take a selfie. Yeah. MR, turn around. TK, turn around. And everybody, you're in the photo here with him. Ready? Wave, everyone. All right. Thank you.
Thank you so much. Thank you, TK. Another round, please, for TK. Thank you.